Hello, it's April 2020, 2025, 4:29 p.m. Japan time. Today, the Nikkei closed at 34,221 yen, down 0.17%. The volatility index in Japan dropped slightly to 33.64, but it's still at a high level. The market momentum has not changed much. Looking at today's session, US Dow futures recovered, which helped the Nikkei avoid bigger loss. However, even though I expected Japan's domestic stocks to push higher to 35,000 or 36,000 yen, with sector rotation, that range just is not showing. There are upcoming events like the meeting between Financial Minister Kato and Treasury Secretary Vincent and the Bank of Japan policy meeting next week. Maybe the market is waiting for these events, or maybe the bond market worries are still holding back risk appetite. Interestingly, domestic retail and growth stocks, which were strong recently, are starting to weaken. Today's Pearl Group did not perform well either. It feels like the sector rotation into domestic stocks is losing steam. I also noticed more put options being bought today. This could be related to the Nikkei Bri and dropping between 34,000 yesterday. It's something to watch how these option positions evolve. Now, let's talk about the Federal Reserve again. I did not research and want to share more about his history. The FED was created in 1930 December by President Wilson through the Federal Reserve Act. It was established after the 1907 financial panic, where bank runs showed the need for the lender of last resort at the national level. However, the FED did not always have full monetary printing power. That only really began after the end of the gold standard in 1971. Before that, the economy was more self-correcting. Banks could fail and the system would reset naturally, not too big to fail. But once the gold standard ended, the FED gained the real power to issue unlimited currency. This allowed the FED to step in during every crisis since then. Starting with the 1987 Black Monday, Greenspan began what we call market life support. Then Bernanke during the 28 financial crisis Lehman shock, Powell during the 2020 COVID shock, the FED kept markets alive again and again. What surprised me is that this system has only existed for about 50 years. The FED's real money printing power is younger than many people think. So we've had roughly 15 years of this central bank driven capitalism, and now maybe that era is ending. In the sense, the FED has protected the wealthy by keeping markets alive, preventing the rich from falling. But before 1970, even wealthy people lose everything in crashes. The gold standard era was a harsher but more natural. Now, after 15 years of the fiat money, we might be go back to a system based on gold or Bitcoin, something with limited supply. Maybe that's Trump vision breaking the fiat system and resulting in sound money economy. To make this easier to understand, think about Excel spreadsheets. In companies, we often inherit old spreadsheets full of complex formulas no one fully understood. Nobody wants to rebuild them because it's hard. So we just keep using them even though errors pile up. Then one day the file breaks and no one knows how to fix it. Maybe the FED is like that old Excel file. For 15 years, the FED patched things with QE and low rates, but the structure is fragile. Just like that spreadsheet, the whole system might suddenly break and no one knows how to fix it. So, while this sounds like a big global story, it's something we all experience in broken spreadsheets in old systems we keep using. In this sense, Trump reset might be moved back to a simpler, sounder system, back to gold, back to Bitcoin. Thank you for listening. See you tomorrow.